Good day and welcome to the Q2 FY2024 earnings conference call of Hindustan Oil Exploration Company Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisors. Thank you, and over to you, Mr. Sonpal.
Thank you, Michelle. Good morning, everybody, and a very warm welcome to you all. Also wish you a very happy Diwali. My name is Anuj Sonpal from Valorem Advisors. We represent the investor relations of HOEC Limited. On behalf of the company, I'd like to thank you all for participating in the company's earnings call for the second quarter and first half of financial year 2024. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Let me now introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We firstly have with us Mr. R. Jeevanandam, Managing Director, Mr. Krishnan Raghavan, Chief Technical Officer. Now, without any further delay, I request Mr. Jeevanandam to start with his opening remarks. Thank you, and over to you, sir.
Okay. Thank you, Anuj. Good morning. Wishing you a very happy Diwali. Hope everyone has received the updated earnings presentation. It is on our website for your reference. I have with me Mr. Krishnan Raghavan, Chief Technical Officer, heading the operations and subsurface team. We will be strengthening our team by inducting a CFO, senior production engineers, senior drilling managers, and technical advisors to increase the operating and managerial capability of the company. Some of the technical persons have already joined, and others will also join shortly. We are pleased to inform you that Q2 gas offtake from Iraq has increased to an average of 23 million standard cubic feet per day from 10 million standard cubic feet per day in the previous quarter. I'll start with the operational update from the eastern region. Iraq gas oil is 0.56 BCF and condensate is 10,350 barrels compared to 0.24 BCF of gas and 4,573 barrels of condensate in the previous quarter. Though this field can produce about 50 million standard cubic feet a day, we have to restrict the production due to lack of demand and the volatility in offtake due to breakdown of plant maintenance of major consumers. This is further compounded by dual pricing for gas produced from the nominated fields of Oil India Limited and private players. The ceiling price fixed by the Government of India for nominated field is $6.5 per MMBTU, whereas for private players and for non-nominated fields, the price fixed by PPAC is $9.2 per MMBTU as on October 23. Therefore, the customers who are mostly public sector undertakings would like to avail the low-price gas of 6.5 per MMBTU before availing the gas from private players at a higher price. This has caused a lower uptake of Iraq gas, and the situation would get reversed once the gas line of IGGL, GAIL, and GNPL are connected and commissioned. We believe that this would get completed latest by first quarter of 24-25. When IGGL lays its own line from Duliajan to Numaligarh, which is about 180 kilometers, the demand constraint would further be eased out, and the connectivity with the gas grid in central India will be, by the time it will be get fully established. This will ensure an increased and stabilized offtake from 2025 onwards. In order to keep ourselves prepared and to ramp up production, 3 legacy wells, Iraq 1, 2, and 4 will be worked over to enhance the production as well as to get additional data. This program is expected to start in the fourth quarter of this financial year. I am happy to inform that the reprocessed seismic data is quite encouraging and the material balance in the field would be higher than expected. In-house GNC study is in progress, which will get validated by third-party reserve auditors, and the new reserve numbers would be updated as soon as the study is completed. Data from workover results would also included with the production data to re-estimate the potential of the block. After these workovers, we plan for drilling 2 additional producers to ramp up to 70 million standard cubic feet per day, subject to the growth of demand and connectivity to national gas grid. As informed earlier, the balance 50% share capital of the GeoEnpro is transferred and is now a wholly owned subsidiary of HOEC. GeoEnpro is the operator to Karsan block, and HOEC will have both directly and indirectly 35% participating interest in the block. There are 70 wells drilled in the block, out of which 28 wells are on production, 9 are gas wells, 4 exploration wells were abandoned. The wells were drilled and produced from upper Gurijan formations. No wells were drilled and tested to know the potential of deeper formations such as lower Gurijan, Tippam and Bareil. This block is producing from upper Gurijan formation for over 40 years. Current production is about 432 barrels against about 350 barrels in the previous 6 months average. This was possible after some acid jobs and workover in some wells. We have an approved work program already exists for drilling 6 wells to the depth of about 1,500 meters to target additional production from upper Gurijan. Tangibles required such as wellheads, Xmas trees and tubulars were already procured. On obtaining EC clearance, which is expected by end December 23, we should be drilling 6 wells, which should increase the production to about 1,000 barrels per day. Substantial upside has been identified and evaluated by GCA both in the lower Gurijan, Tippam and Bareil formations. While drilling 6 development wells, we will finalize an appraisal program for deeper formations by drilling a well to the depth of 3,000 meters by obtaining consent from JV partners. The deeper formations are expected to be gas, and on discovery, monetizing gas will not be difficult. We believe by the time Eastern Regional Pipelines will get connected to the national gas grid. Block 19 exploration block called Greater Duroc, where seismic reprocessing is completed, our team will release the geotechnical order before this month end. G2 of the exploration well will be evaluated and risked before the commencement of drilling. This block is located between Duroc and Karsan, which is 100% owned by HOEC. We have work program lined up for drilling 6 development wells and 1 exploration well in Karsan and 1 more exploration well in Block 19. In addition, plan for intervention of 2 wells for workover in 24-25. We also plan for 2 development wells in Duroc and 1 appraisal in Karsan in 25-26. The expected capital outlay for the next 2 financial years is about 200 crores. Now I'll move to Cambe blocks. In Cambe, all the 3 blocks are having marginal production, and total contract area is about 38 square kilometers with 34 drilled wells, and the data is available. In-house GMG and the SOI team is evaluating the potential of all the 3 blocks to enhance the production. Currently, these fields are breaking even with a meager contribution to the P&L account. In Polish, plan to have artificial lifts in all 3 wells, and the required SRPs are being sourced. After seeing the results and on signing the PSC for R2 contract area, we intend to have 3D seismic acquisition and drilling of additional wells. In North Balol, we are producing from 2 wells and one well drilled by ONGC and 1 by HOEC. We plan to drill additional 2 producers immediately after getting the environmental clearance. Similarly, to drill 2 producers in Arjol, and the number of wells will increase based on the drilling results. Now I move to offshore blocks. In BIT, we have removed the wax deposition in the export line and restarted the production from G2 well. Production from this field is only for 1.5 months in this quarter. G2 well production is little over 1,000 barrels per day, and the gas is about 5 million standard cubic feet per day. G1 well was producing before the cyclone and was shut in during the cyclone. Post-cyclone and post-clearance of the wax, we were trying to open the well for production, but it could not be activated. It is believed there could be some mechanical obstruction which needs to be removed. We have engaged the Baker Hughes to study the issue and come out with a solution. Baker Hughes has commenced a study, and based on the recommendations, we will do the remedial actions to restart the production from D1 well. Underby hoses have been received and is in stock. Replacement work will begin after securing a DSP for this job. We endeavor to carry out this work before the onset of monsoon. We are currently focused on activating the D1 well. Presently, the total oil in stock in the FSO is about 372,000 barrels. Revised samples were sent for analysis, and the results are expected by end of November 23. We have engaged M Junction, an auction platform, to auction the crude among the potential buyers. This process is expected to be completed by December 23, and the first offtake would begin January 24. In FY1 offshore, $383 million was invested and mostly impaired, but this block has 8-slot platform, 56-kilometer pipeline, onshore processing facilities for about 55 million standard cubic feet per day, with storage tanks for oil. Currently, this field is producing less than 1 million standard cubic feet per day to break even. Seismic data of this block was reprocessed, and our in-house geologist team is reviewing. After in-house studies, we will engage a third-party expert in the fractured basement reservoirs in London to review and confirm the proposed well locations. We plan for 3 development wells. If everything goes as per plan, drilling first well will commence in the end of first quarter 24-25. Now I'll update the financial results of this quarter. We report that the standalone revenue for this quarter is 72.56 crores compared to 108.69 crores in the previous quarter. Revenue from offshore DIT block is 19 crores and the previous quarter is 83.44 crores. This reduction is mainly due to shutdown of the field for wound-up cleaning of the oil export line, which took about 1.5 months. In case of Iraq, revenue in this quarter is 49.68 crores compared to 21.17 crores in the previous quarter. The total reduction of 36.13 crores in sales is due to shutdown of DIT field for a substantial period in this quarter. We have an improved offtake of gas in Iraq, but this volatility in offtake will end once the Duliajan gas station is connected to the national gas grid. Field operating expenses for this quarter in the standalone account is 50.46 crores compared to 73.07 crores. This reduction is mainly to non-operating days of DIT field. Total expenses excluding TDA, finance costs, including stock adjustment, is 21.78 crores comparing 62.64 crores in the previous quarter. TDA for this quarter is 4.77 crores compared to 8.85 crores in the previous quarter. Oil in stock in FSO as on 30th June is 292,000 barrels and now increased to 329,000 barrels as on 30th September 23, out of which 60% belongs to HOVC. Stock adjustment credit for the current quarter is 43.52 crores, whereas it was 27.7 crores in the previous quarter. The difference is mainly because of price of crude oil, which is 74.93 per barrel on 30th of June and $93.54 per barrel on 30th of September 23. Standalone EBITDA is 49.05 crores compared to 37.82 crores, and the profit after tax is 38.74 crores compared to 21.34 crores in the previous quarter. In the consolidated account, the total revenue for the quarter is 119.74 crores compared to 187.14 crores in the previous quarter. This was due to the loss of day rates for FSO and MOPU of rupees 33.77 crores due to shutdown of the DIT field. Operating expenses including facilities in the consolidated account for this quarter is 63.6 crores compared to 84.38 crores in the previous quarter. This reduction is caused due to reduction in the field operating cost due to shutdown of the DIT field for about 1.5 months. The total cost excluding DDA and finance and including stock adjustment, the consolidated accounts for this quarter is 42.91 crores compared to 77.43 crores in the previous quarter. DDA for this quarter is 18.37 crores compared to 20 crores in the previous quarter. The consolidated profit after tax is 43.17 crores against 66.07 crores in the previous quarter. EBITDA for the current quarter in the consolidated account is 70.64 crores compared to 96.86 crores in the previous quarter. This reduction is mainly to the shutdown of the DIT field and the loss of production from D1 well as well as the charter rates for FSO and MOPU. Pro Petroleum Limited, hitherto was an associate of HOVC, is consolidated in the current quarter, which makes the consolidated book value of the equity shareholders to 1,090 crores. As of October 23, the outstanding loans in the standalone books are 112 crores and in the subsidiary books is 70, 8 crores. Company has obtained a stable rating for 500 crores for bank loan from India Ratings. With the current cash position and with the continued production, we'll meet all our obligations, including the proposed work program for the contracting for the coming 3 years as planned. Our discretionary planned capital expenditure for the next 3 years is estimated to be 835 crores from 24-25, 25-26 and 26-27. This is mainly for drilling 11 development wells, 2 exploration wells and 5 rig intervention for workover in 24-25, planned 5 development wells in 25-26, 3 development wells in BAT in 26-27. This capex can be met from internal accruals and when necessary additional equity will be raised. Okay. Now we can open the forum for questions now.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may please press star and 1 on the touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take the first question from the line of Rikesh Parekh from Rockstead Capital LLP. Please go ahead. Mr. Parekh, I have unmuted your line. Kindly proceed.
Yeah. Thanks for the opportunity. Sir, I would just like to understand the problem on BAT D1. So exactly what is the nature of the problem, when it was being impacted, and what will be the cost to remediate it, and when do we expect it to restart?
Okay. Thanks. Sorry. 2 possibilities. 1, mechanical issue. 2nd, reservoir issue. This could be the 2 possible issues. Based on in-house analysis, it is a mechanical issue. It is being studied by backer users and we expect a solution to this issue shortly. So this is not going to be a very expensive proposal at this moment, and once the study is completed, we'll have a full update on this.
Sir, when the problem was occurred and tentative, when do we expect it will be activated?
So when we recommence the production, then after opening the D2 well, we plan to open the D1 well. That well is not getting activated. Since then, we have been addressing this problem with the various experts in-house and third-party experts from outside. Now, finally, we engage the backer users to carry out the work.
And my understanding is that D1 well is largely an oil parcel, means oil producing well. So the oil production, the capability at BAT will be majorly hampered because of it, right?
Yeah, that's right, in the last quarter.
So second, regarding the D-Rock field, it's a good progress. We have made an 85% completion. Just wanted to understand how fast can we increase the ramp of the production 50 mmSCF of gas, assuming that Hindustan pipeline get activated from 4Q.
So as stated as such, we are going to work over 3 wells. With the right now, these wells are capable of producing up to 50 million cubic feet, and the workover will not take a longer time. With the 3 well workovers and the existing 3 new producers, we will be able to go ahead with the 50 million cubic feet per day.
But will it be like 3 to 6 months post our connectivity to Indradhanush?
As soon as the connectivity is ready, we will be able to do that.
Okay. And last, sir, on the PY1, what is the estimate we are taking for the drilling of the 3 wells cost? And do we presume that the timeline approvals will be there by this 4Q?
So we estimated the total cost. The first will be expected to be successful, which will be followed by drilling 2 more wells. The total well drilling and the facilities required to be connected estimated to be $50 million US dollars. And this next financial year, we'll be drilling the first well.
Next financial year. Means the weather window will be open in the...
I think at that time it should not be. Before October, the weather should be good. We should be able to.
Okay. That's it from my side. We'll get back in.
Thank you.
Thanks.
The next question is from the line of... Before we take the next question, ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. We'll take the next question from the line of Abhishek Menon from Motilal Oswal. Please go ahead.
Yeah, hi. Thank you so much for the opportunity. So, first question is, if I look at, slide 5 in the presentation, so your gross production is sort of, 6694 in first quarter, 6531 in the second quarter, but net production has gone down quite a bit. So, why is there a decline in net production but not so much in the gross production? So that's my first question.
So this is, I think that the net production is the right number, and the gross production I have to check. I'm sorry about it.
Okay.
Because of the BAT and Assam increase, and probably the right number it is. And what has happened was Assam increase in production is, our share is only 27%.
Okay.
So that's why the gross number is right, and the less number is due to the BAT.
Okay, perfect. That sums it up very nicely. Thank you so much. And second, I think my understanding is BAT, one of the wells started towards the end of September. So if you could let us know, gross and net production from that well. And will that come through?
As I've told in my thing, it is currently about more than 1,000 barrels of oil and about 5 million cubic feet of gas per day from the D2 well. And D1 well, we are working on to activate.
Okay. So this should come through in, you should have a full contribution in the second quarter, in the third quarter, right? October to December quarter.
It's difficult to state a timeline for the D1 well. We are waiting for back study. Once the study is completed, then what type of intervention we will be looking for it. Then accordingly we'll decide.
Okay. So basically, Q2 production will at least be maintained and will be slightly higher in Q3, right? That's a good number to work with.
We believe that should.
That should be good number to work with. Okay. Fair enough. And so I also want to check, your standalone versus Concall. So standalone numbers have gone up, but Concall has gone down. So again, what has happened over there? Is that Assam, which is contributing to this, or is there something else?
When we look at as such in standalone, we had a better revenue from Assam Jirok, and that's the reason it has gone up. And the Concall it is less because we are not able to get the full production from D1 well. And second thing is MOPU and the FSO charges are getting reduced to just for 50%. That's the reason there is a reduction.
Okay. That's it from me for now, and I'll come back in the queue. Thank you so much.
Thank you. Thanks, Abhishek.
Thank you. The next question is from the line of Tejas Shah from Unique Stock Broking. Please go ahead.
Hi. Good day, sir. One is just as an information, Mr. Elango joined Deccan Gold in a form of non-executive director, but I think at the last conference he said he is retiring completely and he wants to give time to the family. So I really did not understand why he joined over there and why he did not continue at Hindustan Oil. On a personal level, if you are aware of something, you can throw some light. This is just as information. Now, my questions are...
Okay, you ask your questions, Tejas.
Yeah, you can take it up together.
Yeah.
Okay. So, questions is, one is this D1 gas production. I think we had a contract with GAIL where we were getting 22% of the value of the oil. Now, in the March 22-23 quarter, they had a call where they said, for the first year of the contract, there is no penalty. It is take or leave kind of thing. But second year, there is a penalty clause which will be considered at the end of the year, looking at how much we were able to supply and not supply. But I think in the last con call, what Mr. P. Lango said, that there is no penalty as such. So why there is divergence in both the statements? So if you can clarify how much penalty will be levied. And on the second thing, DROC, what is the average top line that we are expected to generate, that is starting from 24-25 onwards? And do we not again face the problem of the dual pricing when the whole gas grid is connected? Please, can you go ahead?
Okay, your first question, I have no idea. And the D1 is an oil well, and the D2 is a gas producer. And we have a gas sales agreement with GSPC, not with GAIL. So that will be valid till March 24. That is an year-end adjustment. So we have got 6 more months to go on it. And we expect that at the end of the year only we will be knowing whether we are short or we are oversupplied. So there is in between 1 month shutdown by GSPC also, with overall looking into that, and we should be in a position to say that number is not a big number, and we believe that there may not be any penalty on it.
Okay.
And we believe that there may not be any penalty on it. And in case of DROC, that the current production numbers I have given to you, it is a little over 20 million cubic feet per day for the gross 100%. And once the lines are getting connected, the 3 lines are getting connected, we should be able to ramp up our production to 50 million cubic feet per day. And once the IGGL line is get connected and the national gas grid is fully established with the GSAT, we will be able to ramp up the fuel production to 70 million cubic feet per day, effectively from the financial year of 25-26.
So the current participant has left the queue. We'll move on to the next question, which is from the line of Ajit from Nirzar Securities. Please go ahead.
Hi, sir. Good morning and thanks for the opportunity. Sir, I just have one question. How is the stock valued? Like, is in whether at cost or NRV, whichever is less, or some other way? Thanks.
It is mark to market, Ajit. Okay. So whatever the price based on the closing of the books, that price will be taken into.
Okay. Understood. Thanks, sir. That's it.
Thank you. The next question is from the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hello. Good morning, sir. I hope I'm audible.
Yes.
Yes.
Yeah. So just wanted to know, sir, with our BAT field shutdown, I think, sir, you mentioned the figures of how much revenue was lost. I think it was around 33 crores, right, sir? Hello.
Hello, it should be more than 33 crores because the reason for it, the differential amount totally, also there is an improvement in the DROC and there is a reduction in the BAT.
I'm so sorry, sir. My line just got disconnected. Sorry, sir. Could you repeat, sir? Very sorry for that, sir.
What is happening is there is an increase in the revenue in DROC and there is a reduction in the revenue for about 1.5 months in the BAT. So the overall net reduction is about the amount which I told you, 36 crores.
Oh, so but sir, from the field maintenance shutdown of BAT, how much would it be, and will that come in Q3 because it was maintenance shutdown?
No, I don't think Q3 the shutdown is not expected for a longer duration because the one well production will continue.
So maybe can we quantify how much would we be able to increase our top line by in Q3?
See, I think it's too difficult to put some numbers. It depends on the price. It depends on the quantity. And let us not be supposed with any number there onto it. And you can do the math.
Okay, sir. And so just wanted to know, sir, I think we had faced some issues in the current year, but FY25 onwards, we would be going in full swing, sir? Like, we would not have any other issue that we could foresee, right? So we'll be on back to the run rate that we were at current, like before the cyclone, right? So that would be a fair assumption?
Yeah, I think all technical experts are working at the moment. We are given to the best company, Baker Hughes International. It's a reputed company. And we believe that we will have a solution to the D1 well. And once that comes on it, and better offtake from Iraq, we will be doing better numbers from 24-25 onwards.
Okay. Thank you so much, sir. All the best.
Thank you. The next question is from the line of Ritan Shah, an individual investor. Please go ahead.
Yeah, am I audible?
Yes, sir. Please proceed.
Yeah. My question is on B80 field. So B80 field has not produced with, on the both wells with full potential since the commissioning, and had some technical challenge like separator leakage and flow line wax choking problem. So when can we expect like the production from the both well continuously? Is it an operational team problem or a geology and reservoir issue? So could you throw some light on this? Like, what is the future operation plan? Yeah.
As I told you, we are not finding, our technical team is very confident that there is no reservoir issue. They are believing that there's only a mechanical issues, which they are discussing with the various people. Now the backer is engaged, and with that, we should be able to get a resolution to this issue. And the top sides, we have been improving. There is quite a lot of improvement has been made, and some small issues are still coming up, which the guys are getting addressed properly now. So we are looking the contractor to supply to keep the spares ready. So the top side issues would get eased out by March. I don't think any problem on it. Then the D1 well, we will be trying to work it through with Baker and get a solution to it.
Got it.
Yes.
Yeah, please continue, sir.
Yeah, see what happens, the total, after effectively you look at, the total production from the field is less than 12 months. So the problems are coming one by one, we are trying to address it. And normally it gives, at least it will take about 2 years for any field to get a stable production. So these are the issues, and every time we come out and say something on it, and we also see for it, and we are trying to get it resolved because we are getting some experts from different production process and the reservoir, and all the guys are working on it, and we'll come out with the solution shortly.
And this should also help us in reassessing the full, the full potential of the field. Since we've engaged with Baker now, will that also help in it?
Yeah, what is happening is once the issue is resolved, then we'll have a production data, and that after 2 years of production data, we will go back to the same reserve auditors who have done to re-estimate the material balance, and also we are planning for the additional 3 wells in the block. That will be on 26-27. So all this whole process will start after that. Because now it's more of a firefighting on getting this sorted out on the T1.
Got it. Okay, wonderful. Thank you very much. Good luck.
Thank you. The next question is from the line of Ashwin Reddy from Samatva Investments. Please go ahead.
Yeah, hi, good morning. My first question is on PY1. So for the incremental volumes that can come on PY1, post the work that we plan to do, the price, do we have pricing flexibility and freedom, or do we need to sell it to Gale at the current prices which we have for the incremental volume?
The incremental volume from the new production would be at the price, market price, or PPAC price. whichever is higher. We will not be going. We have already terminated the GAIL contract for $3.66 per MMBtu.
Okay. So this is not the APM price at what you said. This will actually be the market demand price, right?
Yeah, it's a market price, and the market may take the PPAC price as a benchmark.
Okay. Got it. And my second question is on BAT. So I remember seeing that we've given that we're going for a fresh crude assay. So has anything changed in terms of the field, the quality in terms of the perspective, or what prompted this fresh crude assay? Because I believe already had it done once to get the quality of the oil and to get some insight. So any thoughts would be helpful.
So I think we have done one assay, and now what is happening is we have to have an assay of the volume as such which we have that's what we have gone for it. That is about, right now when you look at about 70,000-80,000 barrels out from the D2 well. So this combination as such, because the companies, Injunction and others are looking for a device assay, and the refinery is also looking for it. We will be giving a sample to refineries based on the stock that they possess. That should be matching with the assay which we are giving it. That's why we have given the third party now. And they are expected to give the results by the end of this month. Once the assay is given, we will give it to the Injunction and to put it for the auction among the potential buyers.
Okay. So to clarify, this will give us again better impact on the quality, and that will determine the price of what you get from the injection.
You are right.
Okay, got it. And finally on Dirok. So if I understand, Q1 25 is when the last linkage also will be done, and then we'll have access to the end market, or what is the timeline for us to get full linkages to the end market where there is no constraint on the demand?
So what is happening is our area, most of the gas goes to Duliajan. Duliajan, we got a gas station. From Duliajan, it goes to Numlikar. From Numlikar, it goes to Guwahati. From Guwahati, it goes to Baroni. So that is a GAIL up to Numlikar, up to Guwahati. From Guwahati to Numlikar is by IGGL. From IGGL, it is planning to have one more line, which is having about 3.5 million cubic meters per day capacity line. That is coming to Duliajan, which is expected by all approvals and everything is in place by 2025. Before that, DNPL is having a line which can carry up to 2.4 million cubic meters per day, which if get connected to the Numlikar of IGGL line, there is an additional demand will get open up in that area. So we will be little eased out once these three lines are getting connected and operational. And then the next line of 180 kilometers of IGGL comes in. That will ramp up further in a manner that the total production from Duliajan GSAT can go to the national grid. That is what we believe it. So if that comes on it, there would not be any restriction.
Got it. All right, thank you and good luck.
Thank you. The next question is from the line of Mihika Barve from BQ Prime. Please go ahead.
Good evening. Thanks for the opportunity. Can you all hear me?
Yes, ma'am. Please proceed.
Yeah. I just wanted, if you could please lay down more details in terms of the CAPEX spend. You did mention it'll be for the next two to 3 years. So what will be the CAPEX allocation for the different development wells you all are planning to foresee?
Okay. 24-25, we are planning one workover is on the current financial year itself. We will get completed in Dirok, and 2 more workovers are planned for 24-25. And 6 development wells are planned in the Karsan. And 1 deep wells up to 3,000 meter is also planned in Karsan. In a manner, the Karsan, we can appraise the deeper formations. Then PY1, we are planning for 1 development well. At North Balol, we are planning for 2 wells. Azjol, we are planning for 2 wells. And Palij, we are looking for well intervention by putting the artificial lift. And in addition to all these things, we are looking for an exploration well in B19. These are the work program for 24-25. 25-26, we will be drilling 2 wells in Iraq to ramp up the production. We are believing that the market will come in to absorb the gas up to 70 million cubic feet per day. So then we are planning for one more deeper well in Karsan. So the 3 well in Northeast, and we are PY1, the first well being successful, we will drill 2 more wells in 25-26. And then that's all, the 5 well program on 25-26. And 26-27, we will be having 3 wells drilled for B80. So that completes our work program for the next 3 years. The capital outlay we plan for the 3 years is in the order of 835 crores.
Thank you so much. I just have one follow-up question. This capital outlay, what mode of financing will you all be employing?
So we believe that with our current cash flow, we would be able to meet our all obligations through internal accrual. And if any shortfall comes, we will come back to our shareholders.
Okay, thank you so much.
Thank you. We'll take the next question from the line of Rahul Mehta from Envision Capital. Please go ahead. Mr. Mehta, please proceed with your question. As the current participant is not answering, we'll move on to the next question, which is from the line of Rishikesh Oza from Robo Capital. Please go ahead.
Hi. Thank you for the opportunity. So my question is with respect to the PY1. So when are we looking to start the drilling work here? And also if you could let me know what is the production capacity and when can we commence the work here?
See, the seismic reprocessing is the reprocessed seismic data has been received by our GNG team. Now they are looking into the data and they may do the revised geological model, and that will be given to RCS Energy from London for further fine-tuning the locations. And meanwhile, we will be looking for jack-up rigs, and our endeavor is to start on the end of the first quarter or the second quarter of 24-25. And the volume estimates, we cannot do at this time. Either way, we will be wrong. So because the production potential of this well can be established after drilling.
Okay, got it. No problem. Thank you.
Thank you. The next question is from the line of Aditya Padi, an individual investor. Please go ahead.
Yeah, hi sir. Can you hear me?
Yes.
Yes, Aditya.
Just to follow up on the the earlier questions, just wanted to understand what kind of mechanical issues have been predicted by Baker, if any foresight for now.
So actually what has happened, this well has been shut in initially for about 6 months and subsequently for about 1.5 months to 2 months in the current year research from June actually. Now what is happening is, the people are saying that there is an obstruction in the tubing because the tubing could have been blocked by some wax or some other things. So that needs to be resolved. So that's the reason we get this entire study to the backer users to come out with the issue as well as the solution to this problem.
Okay, sir, that really helps. My next question would be on we have only now D2, which is the flowing well. So how is the reservoir conditions? Is it improving or if you could give any, you said about 1,000 barrels, but what are the reservoir conditions over there?
The reservoir is a little better than expected, but we need to observe it actually for a longer period.
Okay. Got it, sir. Yeah, those were my 2 questions. Thank you so much.
Thank you. The next question is from the line of Abhishek Menon from Motilal Oswal. Please go ahead.
Yeah, thank you for the opportunity again. So just on the, the MOPU and FSO day rate revision, if you can give us some details. My understanding was earlier it was in the range of, I think, $40,000 to $50,000 per day. So what is the day rate now?
Same day rate as this. There is no change in the day rate. Only the day when we are not operating and there is no production, we don't charge the day rate for it.
Okay, so in that sense, that income is lower by whatever days we are on.
Current quarter, that was lower because of that.
Current operating. Okay. So next quarter, that should improve as well.
Yeah, we have completed only about 40 days now, 44 days. And now we have to look for another 46 days. So if the continuing production there, that revenue should continue.
Okay. And on the balance sheet, there is a investment in, I think, associates, which used to have 18 crores. That has gone away. So is that because of GeonPro acquisition or is there something else?
No, GeonPro acquisition has gone up now because they have become a part of the wholly owned subsidiary, so it has been consolidated.
Okay. Perfect. Thank you so much, sir. Thank you. Bye-bye.
Thank you. The next question is from the line of Ralston Lewis, an individual investor. Please go ahead.
Yeah, hello. Can you hear me?
Yes, please proceed.
Yeah, considering the challenges that were called out in the Q2 in the conference call, I believe this is a decent result. So first of all, congratulations to the management. My question is related to the DROP, where we had mentioned that because of the customer shutdown, the production was 1/3, which was predicted to be 2/3 in this quarter, and I think we have crossed a little bit more than that. Can we consider that for Q3 onwards, we come back to your normal 28 to 30 MFST for gas? That's for D1. And considering that we were having for BAT, we were having a production of around 1,200 to 1,400 barrels in the last couple of quarters, which are substantially reduced. Can we expect the production to be around 1,000 barrels per day is what we just now heard. So can we consider that? That's the first question. The second question is with regards to Oil India. They also are coming up with a lot of capacity expansion, and they would also go live, in a couple of years. So would that, because their pricing is much better in the Northeast, would that be a limiting factor as far as our offtake is concerned, considering that we are premiumly priced? And if you can just comment a bit upon the $1.36 million related, the order that was given by the Port of Malaysia, if you can comment on that. Thanks.
Okay. Your first question is on so you have to understand that. So Oil India is a partner to the block with 44%. So they are also interested to sell this gas at a premium as well. And when I told you that 25 onwards, that the Tiliajan gas stations will get connected to the national grid, then it will not be a localized demand. The demand of the nation will get into play a role. So in that case, whatever the capital program which we do in association with Oil India, and similarly the Oil India's program also, all these additional productions can go to the market. So there should not be any issue on account of that. That's the first thing. Second thing, we are expecting the continuing the production of the second quarter from the D2 well. There should not be any issue on it. That's what we believe in it. The third one, you are talking about some Malaysian court. The matter is pending before the Gujarat High Court. So it's prejudice, and it is not fair to me to comment on it. It is sub judice.
If you can just repeat that particular point on the DROC, would it be coming back to your 28-30 MMSC, considering that your customers are online for the Q3?
Yes, once it is connected to the national grid, we should be able to have a substantial demand from that. Whatever the gas comes out from that Tiliajan gas stations can go to the national market. So there should not be any constraint after that.
Okay. And for the D2 well, you mentioned that it could come back to around 1,000 barrels, considering that we will be having a complete 90 days of operations in Q3?
As we speak, it is about 1,000 barrels per day and about 5 million cubic feet per day.
Lovely. Thank you, sir. Thank you very much.
Thank you.
Thank you. The next question is from the line of Rikesh Parekh from Rockstead Capital LLP. Please go ahead. Mr. Parekh, I have unmuted your line. Kindly proceed.
Thanks for the opportunity. So I wanted to understand what is the minimum offtake commitment we have with JSPC in terms of how much production we are minimum required to offer to them?
It is about 10 million cubic feet, that's what, with the plus minus of 10% over a period of 365 days. That's what I remember. Okay.
And our current production is 5 million, right?
5 million right now, but in the previously we have supplied more than 10 million. So, the past.
Okay. Thanks. That's it. Thank you.
Thank you. The next question is from the line of Pratik Bantia, an individual investor. Please go ahead.
Hello. Yeah. Am I audible?
Yes, sir. Please proceed.
Yeah. So my question was related to the B80 field. Like, do we have any phase 2 development plans for it? And are we planning any water injection to maintain reservoir pressure for the long term?
I think thanks for this question. Actually, we are planning for drilling 3 additional producers as planned. That will be on 26, 27. And before that, we would like to see the performance of these 2 producing wells. And after that, we will decide when any water injection is required or not. Water injection will enhance the reserves, recovered reserves more, but that is still being examined by our team.
Okay, got it. And just another question was, if both the wells produce continuously in the in the B80 field, can we match the 5,000 barrels per day, as was expected initially?
Yeah, I think that's our plan as such, but we should now activate the well G1 to get us a better update.
Okay, got it. Okay, that's it from my side. I'll join back in the queue.
Thank you. The next question is from the line of Amrit Kabra, an individual investor. Please go ahead.
Hello?
Yes, sir. Please, sir.
Yeah.
Hello, am I audible?
Yes, sir.
You are audible very much.
Yeah, very, very sorry. Yeah. So basically my question was, D1 well is inoperative, and what time do you think will it get back on track? And is the management taking any steps that D2 well does not face a similar fate?
See, I told you clearly that D1 well is being looked at by backer users and D2 well is on production. So we are taking all possible precautions and whatever is required to be done will be done.
Okay. Also, say if we get both the wells operative at the same time, like they are operation together, do you think we would be able to achieve the target level of 5,000 barrels as we had expected initially?
I just now answered to another investor that we will be waiting for activating the D1 well and then we will be updating after seeing the well activated.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Ajit from Nizar Securities. Please go ahead.
Hi, sir. I just have a follow-up question on the valuation of the inventory. Sir, how much is M2M charged this quarter and the same quarter last year and QOQ? If you can give the numbers.
Yes, just a second. It was the last quarter was the increase or decrease in stock was 27 crores, 26.87 crores, and the quarter 2, 23-24 was 42.7 crores.
Okay.
Thank you. The next question is from the line of Prashant Dahiya, an individual investor. Please go ahead.
Thank you, and thank you for the opportunity. I think a bit of a muted quarter for us, but so I wanted to understand from you, we've recently seen in the global sphere, like Exxon, making a big 60 billion acquisition of Pioneer Natural Resources, and a lot of M&A happening. Are we considering, given the nature of the industry, we are in the phase that it's a sunset industry over the next 10 to 15 years, being a bit aggressive in terms of exploration, in terms of, kind of looking at the resources is essential, right? Are we looking at some global partners who can come take a stake in, but also bring in their expertise and knowledge, but also help us with the capital and generally kind of help, explore the potential which is out there? Because if these next few years are lost, it looks like a missed opportunity as well. That's one. And the second thing on that, the government is also coming out with some new exploration licenses, right? Is the company looking to kind of, pick up some new fields or new exploration areas? Anything you can shed light on?
So I think it's not a sunset at the moment. It will take some more time, at least 2 decades more. That's our belief. The second thing, we are always looking for technical expertise from the rest of the world. And as you see, most of our fields are producing and discovered one, except one, which is also lying between the Iraq and Kazan. That's called the Greater Iraq. That is an exploration. So we believe that we can do a reasonably good job. That's why we lined up the work program, which you can see that 12 wells in the 24-25 and 5 more wells in 25-26 and 3 more wells in 26-27. See, we lined up the work program to quicker monetization of the discovered ones. And any opportunity, we will be looking at always. There is whichever the new licensing comes and open up in the market, we will be definitely getting into it. We will be looking for more and more consolidation.
Great. Thank you. And one last question. In terms of, given the fact that we are very dependent now on these 2-3 big fields and production areas, do we also take insurance for, say, production loss or loss of revenue or any other means so that, once you have established production, any loss should get covered, right, from that perspective?
LOP, loss of profit policy, is not available for the production loss. But if you have got an accident or anything happened on it, that caused a loss of production, that covered under the insurance. So there is no insurance excess for that. But yes, rightly said by you, we are depending on the revenue of 2 blocks. That situation we wanted to reverse. That's why we are concentrating on the block in the northeast, Kazan, to increase the production. And similarly, we are looking at PY1. And similarly, we are going to ramp up the production from the western region. So we don't want to have a dependence of 2 blocks. It will be now more of 5 blocks from 2026-27 onwards.
Great. Thank you, sir. All the best.
Thank you.
Thank you. The next question is from the line of Parshva, an individual investor. Please go ahead.
Am I audible, sir?
Yes, sir.
Yeah. Great. Sir, initially our vision was to get the company debt-free by selling the oil parcel. I think we have some 400 odd crores debt, including the long-term and short-term. Some taken last year December due to working capital issues, and before that for BAT, which was supposed to pay, I think, 15 months from the day of announcement. So just wanted to understand, when we sell this oil parcel, how much rupees will HOEC get as their share, which will be reflecting in cash flow, which will be paying back to the bank, leading to, somewhat debt pressure less on our company? That is my first question, sir.
See, it's not 400 crores. The total debt as on October 23 is 112 crores in the standalone and about 78 crores in the subsidiary books. Total is about 190 crores. That is the bank loans.
Okay.
These are the long-term loans, and our total exposure on this very much limited. So we don't have, it is payable once in a quarter. So exposure is much limited on it, and there is no issue on it for debt servicing these loans. Second thing, we are not going to borrow anymore for further our investments. It is mostly from internal approvals, and then, if required, we will raise equity from our shareholders.
So, sir, I still didn't understand that when you sell the oil parcel, how much money will HOEC?
That I am answering to that.
The cash flow.
Whatever it comes, including our partners' payable adjustments and all, we should be getting at least 150 crores to us. That's what we believe in it. It depends on the price at that point of sale.
So, I can assume approximate 150 crores. And will you use that to pay off the debt by any chance?
No, we don't want to use this because this is all the long-term debts and we don't want to repay it at this stage. And will be only one bank will be supporting us. And we have already had a stable rating for about 500 crores for bank loan from India Ratings. So I don't think, if you call it lesser than 10% is the cost of funds. So we will be leaving this loan at the books for the time.
Thank you for answering my first question. My second question is, the DROC. I understand 85% of the line is already been constructed. So when coming to the remaining 15%, that will be how much kilometers, if you can help me understand?
See, this is about a line which is our own line of 18-inch line, which connecting from Precision to the Duliajan, that is the gas station. Out of that hill area, that is the forest area, 15 kilometers has already been laid. The balance 15 kilometers, we are acquiring, we have to get the right of way and some land acquisition has to get completed. And that is not going to stop our ability to sell the gas because we are requesting Oil India to make a tie-in line of the already laid 15 kilometers in a Catalgo and a place where this can get onto the Oil India line. So additional that 15 kilometers, we will need 2 work seasons, one on this season and the next on the next year. So that will get completed at the end of the 24.
So if I understand you correctly, sir, the total, the distance is 30 kilometers, out of which 15 kilometers we have already placed a line, which we can get it connected to the Oil India. Am I correct?
Yeah, we will be connecting it to the Oil India line once after the 15-inch line is fully tested.
Okay, and sir, this will happen by March 2024, if my understanding is correct?
We are working on it. As such, it is not a stumbling block to us because if the demand comes up, by the time we should be ready with this timeline. And meanwhile, we are we are getting the necessary approvals and other things. Sorry, not approvals, the right of way and other things to get on to the balance 15 kilometers.
So, if I understand you correctly, sir, we have no issues now that we can produce 50 mm, like from the DROC field, because we are already done with 15 kilometers, and currently 23 we are producing, which can go up to 50 without any workover or any further enhancement of the current wells at the DROC. Am I correct?
Yes. Current wells we can go for, but on a safer side, we are going for a workover also.
So that workover frame would be how much? 2 months, 3 months? Any idea?
Workover will be hardly taking about 15-20 days. That will be for each well. So we are planning one well in the month of March, in the current financial year itself. 2 wells and a back-to-back will get completed on the first quarter of the next financial year.
So from this, can I assume that 50 that production from DROC can start happening by second quarter of next financial year? Would that be fair to assume on a safer side?
As explained earlier, this is more of a demand-driven, not the supply constraint from our side.
But since we get connected to the national grid after getting it connected to the Oil India pipeline, so then that, there would not be any constraints in demand, right?
Yeah. If there is no constraint with demand, as per our geologists, we will do the material balance and we'll come out with that. We can go up to 70 million cubic feet per day.
Okay, and the last question will be FSO and MOPU for BAT revenue would be the same considering only one well is on? or would we be charging only half of the revenue?
No, it is on the full revenue mode as long as the production is from the field.
So even if one well is on, we would charge full revenue, right?
Only we have got 2 wells. Now one well we are producing 1,000 barrels and 5 million cubic feet of gas, and we will be charging on to the 200%.
So that will be $50,000 every day, if I'm not mistaken.
That is as per the rate which we have already communicated. That is perfect.
And so while repairing the D1 well, would we be shutting down the BAT plant by any chance? Would that be a requirement too of shut down the plant when we, fix the D1 well?
For activating the D1 well, we don't require to shut down the plant.
But for fixing the mechanical issues in the D1 well, do we need to shut down the plant?
Don't need to shut down. No need to shut down.
So it is fair to assume that we will not be expecting any further shutdowns in the next 2-3 quarters, coming quarters.
We will take it as it comes. It's a certain unforeseen, foreseen. So we can't predict so much actually in oil and gas field operations. So.
And so now that we have Baker and Hughes, is it fair to assume the BNet is no more engaged with our company for maintenance purpose?
What is it? I couldn't get your question.
So now that we have hired Baker and Hughes for study purposes and fixing the well for BAT, is it fair to assume BNet Energy from UK is no more associated with our company?
Each one is looking into their specialization. And Baker Hughes is a company. They are drilling and completion and reservoir and many things. BNet Energy is a construction contractor. All will continue. Both will continue.
I'm sorry to interrupt, Mr. Pashwa. I would request you to kindly rejoin the queue. The next question is from the line of Rushabh, an individual investor. Please go ahead. Mr. Rushabh, I have unmuted your line.
नमस्ते साहब, मेरा आवाज आ रहा है?
Yes, sir, we can hear you.
वो हिंदी में बात कर सकता हूँ साहब?
जी कर लीजिए साहब.
जी साहब, ये BAT में D1 वेल का मामला क्या है? वो चालू क्यों नहीं हो रहा है? मतलब बार बार बंद होता है, फिर बंद रहता है, फिर अचानक चालू होता है. अभी मतलब कुछ इक्विपमेंट का पार्ट टूट गया है कि वेल के अंदर वैक्स का तकलीफ है कि क्या है?
हम लोग सोच रहे हैं एक ही बार प्रॉब्लम है था, सारी बार ही नहीं हो रहा था. एक ही बार तो साइक्लोन का टाइम बंद किया, उसके बाद आफ्टर वैक्स किक निकालने के बाद रीओपन किया, उस टाइम चालू नहीं हुआ. इसके लिए तो हम लोग सोच रहे हैं ये मैकेनिकल इशू है. मैकेनिकल इशू मीन्स वैक्स का कुछ होगा अंदर ट्यूबिंग के अंदर. इसलिए तो हम लोग लगा दिया बैकर यूज जैसे, वो एक्सपर्ट है इंटरनेशनल, वो काम करेगा एंड उसके बाद रिपोर्ट देगा, क्या करना है वो बताएगा.
मतलब उसकी ट्यूब खराब है, वो जो पाइप बोलते हैं वो खराब है? आपको ऐसा लगता है?
कोई पाइप खराब नहीं है, पाइप का अंदर कोई कचरा हट गया, ये लगता है.
अच्छा, वो तो केमिकल डाल के भी सही होता है ना, या हॉट लाइन का कुछ गर्म पानी डाल के भी सही होता है?
ये तो कर रहा है हम लोग, बट हम लोग खुद करने के ट्राई किया था, बट एज सच एक बेटर एक्सपर्ट से जाना तो अच्छा है. सो इसलिए तो बैकर के पास दिया डेटा.
करीबन 3 महीने में हो जाएगा, आपको क्या लगता है साहब?
जी हम लोग ट्राई कर रहे हैं दोस्त, ऐसे हो गया तो हम लोग वापस आ जाएगा आपके पास. आई विल इन्फॉर्म यू.
Thank you. Mr. Rishabh, I will request you to kindly rejoin the queue. Reminder to all the participants to kindly limit their questions to 2 per participant. We'll take the next question from the line of Jaisal Shah, an individual investor. Please go ahead.
Sir, अपना FID Rock, what are your plans to start production? And do you have a pipeline which will again join to D-Rock or it will again join to Dulian? How do you do planning for the pipeline from that production?
This are going through the Oil India line at the moment, so it will continue as such. So whatever the line we are having as such, it will get tied with the Oil India line.
And how, when are you planning to get this production up from D-Rock, upper D-Rock?
So we have explained to you that there is a demand constraint. Once that gets sorted out, that all the the 3 lines, the DNPL line and the IGGL line and the GAIL line are getting connected and commissioned. It will get into the national grid. Once get into the national grid, there should not be any issue. The demand constraint will get eased out.
अच्छा सर, इन बिटवीन गेल में अपना कुछ 6 करोड़ रुपए का गैस का इश्यू था. हैज इट बीन सॉल्व्ड?
So that's an old issue which we collected the money from that.
Thank you, sir. The next question is from the line of Mehul Panjwani from 40 Cents. Please go ahead.
Hello, sir. Thank you so much for the opportunity. I have 2 questions. One is on fundraise. You did mention that right now there is no need for capital for the company, but if there is a need, instead of borrowing, you will be considering equity. So will it be private equity or will it be rights, or can you please throw some light? I know that this is a very tentative thing, whatever you would be sharing with us. And also, what is the tentative timeline you would be considering for the fundraise? I mean, depending on the various wells which you have already mentioned in your plan. That is number 1 question.
Our capital program at the moment, as per our estimates, we don't need any fund required. And if when the programs are going on, if we don't have the money, that point in time only we look at that. So at the immediate future, I don't think any fundraising is planned. So we will be comfortable in carrying out the work program with internal approvals.
Okay, sir. So tentatively, when again would be there be any consideration, maybe 6 months or a year's time, when you will be looking at this particular aspect?
So I don't have any timeline on it, and we have when we have the resources, we will go ahead and work the program. You should also understand this is more of a discretionary capital. This is not a committed work program or minimum committed work program to the government or anything. This being a discretionary capital, we should be able to work with our internal approvals. And still we need, when we got a better results from the drilling of the wells, and we wanted to quicken the process further and shorten the duration therein, and if we need any money therein at that point in time, we will go to the investors.
Thank you. We'll take the next question from the line of Manan Patel, an individual investor. Please go ahead.
Thank you for the opportunity and wish you a very happy Diwali, sir. So first question is, so from B80, D2 well was expected to be primarily a gas well, but from the production data that you are sharing, it looks like a lot more oil is being produced. So can you throw some light on, has the reservoir composition changed, or is the D2 expectations now different versus before? And second question is, can you share on the what is the current levels of production in D-Rock, and without Indradhanush coming in, can we expect a 25 MMSCFD sort of production from D-Rock?
To the first question, it is the D2 well we were expecting. There is a gas cap. That's why there is a gas production is maintaining at 5 million right at the moment. It was initially higher. Now it is also, we are maintaining at 5. That should be the stable one for us. And oil, we were initially, if you could see the test results, it was about some 800 to 900 barrels. Now it's doing better as such. It is about some 1,000 barrels. So what we need to have it at least a 2-year production data, or at least continuous production of 1-year data to evaluate this, re-evaluate this wells and its the reservoir there. So we are waiting for it. So our priority is to deactivate the D1 well. And the D-Rock, as I told you, it is a volatile. Someday it goes to 0.8, it means about 25 million. Someday it goes to 15 million. It is getting averaged out around 20 million standard cubic feet per day.
Okay, sir. That's very helpful. Thanks a lot.
Thanks.
Thank you. The next question is from the line of Rikesh Parekh from Rockstead Capital LLP. Please go ahead.
Thanks for the follow-up question. Sir, in our previous release, we have talked about plant shutdown in this quarter. So anything planned for the B80 field in this quarter?
So in this quarter, as such, we may have go for a shutdown only when we identified a DSP, but that will not be planning for this quarter. It will go only to the next quarter.
And last from my side, sir, the D2 production means can it be increased because we were limiting the production of D1 and D2 initially because we have a capping on the revenue share. So by any chance, is it possible to increase the production of D2?
So I think our people are working on it. So from the health of the reservoir, we don't want to increase the production. But we have to ensure the longevity. So we are producing over 1,000 barrels and about 5 million cubic feet of gas. That's what we will continue with.
Okay. Thank you. Thank you.
Thank you. The next question is from the line of Aditya Padi, an individual investor. Please go ahead.
Yes, sir. Just a follow-up on my previous question. Just wanted to understand that you mentioned about the VAT choking that could be anticipated by Baker. So wanted to understand if would there be a rig intervention requirement, and if so, then what would be the expenses for it, and when would that be?
So actually, we are waiting for the study completed by Baker. After that only we will get to know it full.
Okay, sir. Okay. Thank you. Thanks, sir.
Thank you. The next question is from the line of Rahul Mehta from Envision Capital. Please go ahead.
Sir, thank you for the opportunity. I have two questions. One is, when do you expect to commission the National Grid project? And second, you just said that there would not be a demand constraint after it gets commissioned. So what kind of difference we can observe in the numbers of the offtake in terms of financial year 24 in comparison to financial year 25 after it gets commissioned?
24-25, we are expecting the line of the Chiliajan national pipeline of the older line, which will get connected to the IGGL line. So that will ramp up at least up to 50 million cubic feet of gas per day. Once the IGGL of 180 kilometer line also, the new line gets connected, then we will be able to ramp up our production to 70 million cubic feet per day. That would be from 25-26. We believe that would be from 25-26.
And there would not be a demand constraint issue after we connect to the national grid, right, sir?
The country needs natural gas. If it move out from the tariff system from northeast to Gujarat or any other part of central India, then I don't think we are not able to meet the full national demand with our existing production of the nation.
And when do we expect it to get commissioned?
This one line we are expected to get commissioned by 24-25, another one line by 25-26. That's what we are believing. And first quarter or second quarter, that DNPL line may get connected with the IGGL. That will ease out the demand issue. And the other line, that capacity is about 2.4 million cubic meters per day. That's what I understood. If the new line gets connected, that will ramp up to 3.5 million cubic meters per day. So additional 1 million cubic meters will get added. So with this, and if it's connectivity established at central India, with the gas grid, then there should not be any demand constraint per se. That's what we believe in, and we are working at it.
Thank you. The next question is from the line of Mehul Panjwani from 40 Cents. Please go ahead.
Thank you so much for the follow-up question, sir. One is how long, I have two questions. First question is how long is the study anticipated to be completed by Baker Hughes? That's the first question. And second question is on the demand. You just answered in the previous question that we are looking at Q1 or Q2 of FY2024-25. So can we safely assume that the demand constraints would be not there by September 2025?
I think your first question is about the demand constraint will not be there if there is a connectivity established to the national grid. So they are commissioning the 3 lines, and if that get connected, and there will be an immediate ease out of the demand, that will help us to get up to our 50 million cubic feet of target. And then the IGGL line of 180 kilometers, which is to be constructed, if that gets connected to the Piliajan gas station, further about 1.5 million cubic meters of demand of gas can pump into that line.
Excuse me, sir. Where is the first milestone? What calendar year?
I couldn't get you because you are not audible as well. Not able to make that.
Am I audible, sir? Am I audible?
Yeah, now it's better. Tell me.
Sorry, sir. When is the first milestone in terms of calendar year for the demand to get eased out?
So the first milestone we expect as such, because it is not done by the government companies are working on it. So what the indications given to us is on the first quarter of 24-25 for the connection of the DNPL line with the IGGL and to the GAIL line. And that IGGL line is planned to start. They will start work sometime in end of this quarter, and they may take about a year plus. So that will come into action only by 25 or 26. So the exact timelines are depending on those companies who are working on it, and we get to know only from discussion with them.
Thank you. Ladies and gentlemen, this will be the last question for today, which is from the line of Parshva, an individual investor. Please go ahead.
Hi, thank you for the opportunity to answer. Hello?
Yes, sir, please.
Yes, sir. So, wanted to understand if the D1 well starts, how would you manage the pressure, like the pressure for the D1 and the D2, that could be a little bit of a hassle for you. So, any plans of how to manage it since you have all the technical with you on this call? Can you help understand?
Yeah, we wanted to first activate the well to put the pressure there onto it. We know that what was the pressure earlier there onto it. So then oil uptake should not be any problem because we have got 2 separators therein. But the gas uptake, we may need a compressor. We may not need a compressor. Will be known only we fully activated the well.
Okay, and so this compressor that you're talking about will cost how much? Or you already have it?
No, we have been sourcing it. It should be less than about 7 to 8 crores, so less than $1 million.
Okay, so anywhere between 60-70 crores is a compressor, and you have already sourced it, right?
So we have yet to source it. Actually. We are talking to various people. First of all, we wanted to activate the well before we commit to the additional capital.
Thank you, sir. Ladies and gentlemen, as that was the last question for today, I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Okay, thank you. While we continue to focus on achieving the full production of BAT and Iraq, we will embark on drilling wells in Kharstan, Western Region and PY1 to develop these fields to their full potential. This will reduce our revenue dependence on BAT and Iraq. We will also increase and strengthen our talent pool to sustain the growth momentum and the associated challenges. We once again thank you all for joining us today and wish you and your family a very happy Diwali. Thank you.
Thank you, members of the management. Ladies and gentlemen, on behalf of Hindustan Oil Exploration Company Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.